All right, traders, I just pulled an all-nighter without even realizing it. I was scanning for stocks the entire night, trying to find that number one setup, trying to find that best setup to trade at the best price, and I have found it. I can confidently say that I found it. I'm going to be sharing the trading plan with you. It was absolutely crazy, man. I was scanning for stocks all night, and I didn't even realize I pulled an all-nighter. I had meditation music blasting in the background. I had sage burning. I was in my complete zone, my complete flow state. And then once I found the best setup, I turned around and the sun was up and I was like, oh my gosh, man, this is going to be it. This is going to be the play. So I'm going to share it with you. I'm going to show you and explain to you how I'm planning to trade this setup. It's a day trading opportunity, and it is also a midterm put option opportunity. So let's get right into it. Make sure you smash that like button. Let me know what you think of the new mic quality. I'm done messing around, man. We're going to be taking things a lot more seriously here. We are now professional as fuck. So let's get right into it. So in terms of the number one setup, and make sure you subscribe to this channel because nobody is giving you plays, opportunities, in situations like this. This is going to be a put option opportunity, and this is what the best setup looks like. Win or lose, I am honored to trade this setup. I'm not going to be able to win all the time, but this is what the best setup looks like. So if I take the L, respect, and if I take the win, then it is what it is. Like, this is what the best setup, this is the best strategy I have for you. It is called a gap close reversal to fill the gap below. For those of you who follow this channel, you are well aware of the setup. I recently used it twice last week, which had a big commitment to my 55% plus gains in terms of the last 7 days on Visa put options. Now, I want to break this down for you. This is K stock, Kellogg's, right? And we have one of the highest gaps to fill above at $74.70. So what I like to do is, in terms of buying put options, and my best strategy for put options is, I like to wait for stocks to rise to their key resistance levels with big micro, midterm, and also long-term downside potential. And I like to wait for them to hit their key resistance. I like to wait for them to fill that key highest gap to fill above. So what I'm going to do is, I am going to draw a line here, and this is going to confirm where the gap is waiting to fill, $74.70. As you can see, you have big micro downside potential as it sold off all the way down to the 66, right? So with that being said, this is how the stock reacted for 2 days in a row since it filled that gap. As you can see, let's pull up a 5-day chart here. So this is the initial reaction as it filled the gap, which was on Monday. You could see right here, it filled the gap, it came back down. It tried to have a little reversal, and you could see it started to sell off right here as well. And then you can see the next day, it has a quick little morning rip, and then it has this little micro gap down. This is another key level I'm going to keep an eye on right here, $74.80. It has a little micro gap down right here. It starts to have that gap close reversal. It turns the new previous closing price at $74.50 into resistance, and then it starts to sell off. So what this means is, in terms of confirmation, this is an amazing bearish candlestick confirmation on the daily chart. I've been using this very successfully. This is the same candlestick that I used to successfully swing trade my put options on FNKO, where I was able to predict that first and second red day. You could see the def candle right here with the gaps fill below. Next day, it sells off. Kellogg's looks 10 times better because it's a gap close reversal to fill the gap below. It's currently a lot more volatile. The put options are extremely cheap and they have time. So this is what the best setup looks like in terms of swing trading opportunity. If I had actually found this yesterday, I most likely would have been swing trading put options into the close, but it's not too late to get in. So we have the bearish def candle. The stock hit the key major resistance level with big downside potential, and it filled one of the highest gaps to fill above. The daily confirmations have all triggered. I think this can be a great midterm to leap option play. So in terms of if you are interested in going with the midterm put options, I would play it safe and give yourself more time than needed. If you're looking to swing this, I would go with a June 17th 72.5 strike. If you want to play a little riskier, you can go with a 70 strike. Those are the strikes that I would go with on a June 17th. If you're looking to do midterm leap put options, I think those will do well. If they go against you, you can scale into it. So kind of scale into it if it starts to go against you. But here's the deal. This is currently red on the day. Most stocks that got absolutely crushed, that aren't blasting through 52-week highs, right? They're up right now. They're up. Most stocks are up right now for the micro. Kellogg's K is completely drifted away from the market. It's in its own little world. It's in la la land right now. Most stocks are getting absolutely crushed in terms of the daily charts. But for the micro, they're having little spikes. A lot of stocks are having some micro spikes right now, but Kellogg's is doing the complete opposite. It is not following the market. It's completely drifted away. And what I want to explain to you is there's a gap. There's a gap to fill below at 67.85. So for that leap put option swing trade, I think we're going to be able to fill it within time. So I gave you the strike. I gave you the recommendation in terms of the leap puts. You can start sizing into those. I think that'll be a good one if you're patient. And if it goes against you, and in terms of if it goes against you, if you're down 30%, once you see bearish confirmations, then I would start scaling into that. Now, we need to discuss the day trading opportunity. So there's a day trading opportunity, and then there's a midterm put swing trading opportunity. In terms of this day trading opportunity, this is what I want you to understand, right? So in terms of the day trade, this is what I have for you. The previous closing price is at 72.93. So we're going to draw a line right here at 72.93. Here's the deal. This is key resistance. We're going to call it 72.90. This is key resistance with big downside potential, okay? So what I want you to understand about Kellogg's is if that reacts as a resistance level, which you can see it currently is, this is going to sell off very, very hard and most likely crack the key support. The make it or break it support zone is going to be about $72 to $71.70. That's your make it or break it support zone. Once that cracks and reacts as a resistance level, this is going to sell off hard for the micro to fill this gap at $70.23. So in terms of what are the best prices to buy puts, we are currently red on the day while most stocks are having micro spikes. In terms of the best prices, resistance $72.90. If it cracks $72, the puts are going to print. It should be able to take out $71.50, and then within some time we should be able to fill this gap that's waiting to fill below at $70.23. Now, in terms of risk, let's talk about risk. If this breaks out and we start to go above 73.20, your risk is going to be to fill this gap right here. If this breaks above 73.20, the best entry is going to be 74.53. That is truly going to be the best entry, 74.53 if it rips above 73.25. So in terms of my day trading plan is to mainly look to buy puts. If it starts breaking down, it looks bearish, it starts reacting as a resistance level towards this 72.90. And if we can start to crack 72, I'll scale in on the key breakdown as well, but I'm mainly looking to get in towards the higher upper end of this resistance towards 72.80. Now, this is what I love about this play as well. The options are very cheap and they can print, right? So this is what I wanted to share with you in terms of if I do buy these today, I am going to be going with the 72.5 at the money strike, 9 days till expiration. And it's only $1.25 if you get filled in the middle currently. These are extremely cheap. If you're looking to potentially pick up 2 contracts or play on the higher, riskier side, you can consider the $70 strike. Those are a lot more risky, and that's more of a swing trade if you were to do those. And like I said, with swing trading, I would give yourself more time than anticipated and go with the June 17th. I do believe the May 20th have potential, but I would just play it safe and give yourself more time than anticipated. There's plenty of time on these, and they're very cheap. And if it goes against you, you can scale into it. So in terms of how I do leap options, I'm extremely confident in. And if it goes against me about 30%, I'll typically scale in some size instead of cutting my loss. So with leap options, I usually just let ride. And in terms of how I play them in a situation like this, I would be aiming for 100 to 150% return. and my max risk would be around 50%. And I wouldn't size in my full size right away. I would save some in case it goes against me, about 30% to average my cost down. I only average my cost down when I'm down big in a leap option. So I trade leap options differently than how I day trade options. I just want to clarify that, right? Because it's very hard to time a macro sell-off for the micro. If you're entering a macro trade where you're trying to hold this thing out for the gaps to fill at 67, it's very hard to time that for the micro. So for the micro, it could go against you, but we're playing for the macro in terms of this swing trade opportunity. It's a macro trade. So if it goes against me like 20, 30%, I'll look to scale into the puts if there's a bearish confirmation. If not, then I'll start to cut the loss. But just know I play leap options differently than how I day trade the options. So I think the day trade idea is phenomenal, and I think the leap option idea is phenomenal. I think we're good to go. I think we're good to rock and roll. I think we got all the confirmations that we've needed. We filled the gap. It's reacted as resistance for 2 days in a row. We got the def candle, which confirms we should have a red day today, and we are seeing that red day. So I gave you the key levels. I gave you the key breakdowns to look for just to show you how this stock normally reacts when it forms this bearish candlestick as well. You could just see right here, same candlestick. Look what happens. It sells off, right? And if you just go back throughout the history of this stock and many other stocks, it tends to get absolutely crushed. This is another example. It sells off a key resistance. It sells off a key resistance. It just happens over and over again. Guys, this is the best setup at the best price. Like I said, no matter what happens, I'm truly honored to play it, right? Let's say, I buy puts at like 72.80. It rips against me. I get stopped out at 73.40 or something like that. I take the L. Then I size in bigger when it gets to 74.80. Like this is a no-brainer. We have some little intraday gaps here at 75 to 74 that can fill before the massive crash. So we do have to be careful. Just know your make it or break it level is truly going to be, in terms of today, $72.90. If it reacts as a resistance, if it cracks, we should see 71.60, which is your make it or break it support level. If 71.60 cracks, we're on track for $70.23. In terms of awareness, you do have to understand, in terms of awareness, this can potentially have a micro rip at $70.60. So if you're trying to play it safe and it bounces off at 760, you got to lock in profits, because then it go back to your initial entry. But regardless, from the overall side of the move, this looks like a phenomenal put opportunity, right? Especially for the swing trade, right? Because it could be something like this, where it just forms this def candle and then it rips back up a little bit, but then it sells off really hard. I don't think we're going to have a problem at all making money on a June 17th put option at a 72.5 strike, 250 to 270. You can also consider, if you want to play it a little riskier, 1.5 to 170, right? We're going to be using these options to minimize our risk and sizing accordingly. This is a full confidence A1 setup, so I am going to be taking a slightly bigger position size than I normally would. It's very hard to find this setup in current market conditions at such high resistance levels, where we see a stock hit a key resistance level with big micro downside potential, and there's a gap to fill above. In terms of the current market conditions, this is extremely rare, as most stocks look like they want to sell off to $1 in terms of the macro perspective. So due to that reason, and due to this phenomenal trading opportunity and the rarity of it in terms of current market conditions, while everything's oversold, this is extremely overbought. I am going to be taking a bigger position size. And then in terms of my max risk, in this particular situation, I'm going to be risking about 4 to 5% of my entire portfolio. And then in terms of reward, the reward is going to be at least to get 10%, but it could be a 15% to 20% plus. So around a 2 to 4.0 risk to return ratio. That's how I'm planning to play it. And like I said, if you want to see me trade these live at market open today, it's going to be the first link within the description. You can join Trader Society. You can trade live with us every single day at market open. I currently have 50 stocks on my watch list, and this is the best one that I see. So it's mainly going to be what I'm focused on. So I hope you guys learned something from this video. I hope you guys enjoyed this lesson. I just wanted to bring awareness in terms of what the best setup looks like. I encourage you to use what I'm showing you, right? I'm trying to give you that eye for the market. I'm trying to give you that third eye for the market, where you see what I see And then you can bring a different setup with the same eye, with the same pattern to my attention. So we don't miss out on any of these setups. I can help guide you and trade you guys within these trading setups because I've truly mastered this trading setup in terms of what it is that I'm sharing with you. Like I said, this is the best strategy 2022 in terms of what I have to offer. It's called a gap close reversal, where the stock fills a higher gap at key resistance with big downside potential, right? And then it goes back when it fills that gap, has a reversal, forms the bearish confirmations like we did for 2 days in a row. It goes back down to start to fill the gaps below. We have a gap to fill below at 70.23. That's your micro target. Your macro target, if you're going with the June 27th puts, is going to be the 67.85. I do believe there's going to be a great day trading opportunity. And I do believe there's going to be a swing trading opportunity. In terms of like which one do I think you're better off with if you were just to go with one of these, most likely the June 17th put option. I think you're better off with the leap option, but I think these day trading put options are going to be phenomenal as well. And just know these puts truly print if we can crack $72. If we could just take out 72, I know there's some support at like 71.60, but man, if we could just take out this 72, ideally, I think if we could just take that out, we'll be able to crack 71.60 without a problem. Just keep in mind, there's still support level. And just know, once 71.60 cracks, there is no support, just a big green bar. So that's when you know the puts are going to print like crazy because there's no support. So if 71.50 cracks, this is going to go straight down pretty quickly to fill that gap. There's a gap to fill below at 70.23. In terms of how do you measure your rewards on these? Say you bought this contract, the 72.5 at the money strike, right? Right now, the stock price is nearly at the money on these. Say you bought this at the money when the stock was trading at 72.50. The delta is going to be 45 cents as the stock drops. That will rise. Let's just round it to 50. So every single time that stock drops $1 in your favor, those contracts are going to go up 50 cents. So if you get in at 120 and the stock's at 72.5 and it drops to 71.5, those contracts are going to go from like 120 to 170. And then if it drops to 70.50 to fill the gap, they're going to go from 120 to 220. That's almost 100% return. So that's the setup. I wanted to share it with you. This is going to be a great play. I'm personally planning to day trade it and swing trade it. I know how to size in it quarterly. I know how to cut my losses. If I lose the first time trading it, it's not going to be an issue. I am going to hit this one. And when I hit, it's going to hit. So that's going to be it, guys. Thank you so much for tuning into this video lesson. If you want to check out Trader Society and trade live with us today at Market Open, there's so much included to it. It's going to be the first link down below in the description. I will see you guys till then.